take price stability seriously. So as the Reserve Bank of Zimbabwe, together with the government, the measures that we have taken since last year are actually helping the country. We have seen prices significantly going down. In other words, we have put inflation firmly under control since September 2022. Reflecting these efforts, we have seen month-on-month inflation declining significantly from a peak of 30.6% in June 2022 to a negative 1.6% in February 2023, and also in March, inflation was 0.1%. So what it tells us is that our prices have been firmly under control, because I think for a long time we have not recorded inflation in the negative territory. It was only between September 2014 to February 2017 where we had a deflation in the country. But in February, we also recorded a negative inflation, which is a reflection that there's a price correction mechanism going on in the country, especially in terms of US dollars. We have seen prices in US dollars going down. For instance, I think cooking oil used to be around $6. Now we are talking about $4. When you look at in the streets, if you look at bananas, although they benchmark them to $1, but they used to be $4.7. I saw someone selling $4.14. So it shows us that there is a correction in terms of prices. So prices are stabilizing. Then when we also look at the annual inflation, which is the weighted annual inflation, it has also declined, with the March figure being 87.6%. And going forward, with the measures that we are taking, measures that we are implementing, we see the inflation outlook as being positive, underpinned by a tight monetary policy that we are running, and also the bumper harvest that we are expecting this year because of good rains. So we expect the bumper harvest to dampen food prices. As a result, we are likely to have lower food inflation and also lower overall inflation. Then if you look at the financial service sector, our financial service sector has remained safe and sound. Recently we have witnessed some instabilities in the USA, but here in Zimbabwe, our financial sector is stable. The banking sector is able to underwrite big businesses, including investments. Then when we look at the foreign exchange market, what we have witnessed is that the country is recording significant amount of foreign currency. Last year, we received foreign currency to the tune of 11.6 billion, which is the highest ever. Because the time when we were fully dollarized, we used to receive foreign currency of around 6 billion. So when you compare those periods around 2013, 2014, 2015, it was around 6 billion. But last year, we had 11.6 billion in terms of foreign currency receipts. And also on the balance of payments, over the years, we used to record current account deficits. But beginning 2019, we have been recording current account surplus sustainably from 2019 up to 2022. We have been recording current account surplus. So when you have got a current account surplus, what it basically means is that your exchange rate must actually fail. We should see the exchange rate appreciating. But in the context of Zimbabwe, we have seen the exchange rate depreciating despite a significant amount of foreign currency that we are recording. So the question is, why is the exchange rate depreciating? So normally it is to do with the store of value considerations, where people, they are trying to convert local currency into foreign currency, because we are using a dual currency system. So whenever you have got a hard currency and a weaker currency, people always want to move to a stronger currency. But as the Reserve Bank, we are putting measures, the government, we are also putting measures to strengthen demand for local currency, so that we balance the mix of currencies in the basket, and also to stabilize the exchange rate. So Overall, as the Reserve Bank of Zimbabwe, we are committed to stay the course of a tight monetary policy to preserve stability, which is important for both short-term and long-term investments. And we are doing this by aligning the interest rates to inflation developments. We are also taking measures to smoothen exchange rate movements through the auction system that we are running on a weekly basis. We are also taking measures to support savings in local currency through instruments that compensate investors for potential exchange rate depreciation. For example, the gold coins. It's a retail investment product. I know today we are talking about retail investors. So when you talk of a gold coin, it's a retail investment product, which can also hedge against potential exchange rate depreciation. So you are encouraged as the retail investors to also buy gold coins, which is a very good investment. Then we are also taking measures to promote savings and time deposits, which are critical for value preservation of investable funds through the setting and regular reviews of minimum interest rates on these deposits. So as a Reserve Bank, we have put minimum deposits for savings, minimum interest rates for savings and time deposits, so that investors are also not prejudiced by banks. So let me end my remarks by congratulating Mr. Maketo